Well, let's move on then. The JK Lakshmi stock, well, that hit a fresh 52-week high earlier this week. It's nearly doubled from the lows, more than doubled, in fact, from the lows that it hit earlier this year. Checks by various brokerages like Jefferies also suggest that cement space has seen volume surge, demand come back, and input costs have cooled off. The sector has further got a boost because pet coke prices, coal prices have come down. To understand more about the sector and particularly JK Lakshmi Cement, we're joined by Mr. Arun Shukla, the President and Director at JK Lakshmi Cement. Well, good morning, Mr. Shukla. Thanks so much for joining in. As we speak, the stock is at a fresh 52-week high, and I think this is your first media interaction. So good to speak to you. Mr. Shukla, a lot of the sell side, they're very excited by your commentary, and on ground, I believe, you're doing periodic checks with your sales force as well. You've been focusing on market share. So tell us about growth that we're looking at for this year, that's for FY23. What kind of a growth number are you looking at? And if you want to give us a hint on the market share parameter, which market are you looking at expanding your share?
Yeah, thank you so much. Thank you for inviting me on this call. And JK Lakshmi, as you know, our footprint is there in north, west, and eastern part of our market, and we hold a sizable market share in all these markets. Our growth strategy has been profitable growth strategy. Wherever we are having sizable market share, what we call it, fair market share. And as you have seen, JK Lakshmi has progressed very well in the past few quarters, and we have been working on a lot of internal efficiency improvement, and particularly on top line part of it. When I talk of top line part, then particularly we are focusing on price positioning, our what we call GPS, geo mix, product mix, and segment mix, and obviously I think taking advantage of technology to give a differentiated experience to customer and build channel capability. So this is what we have been doing, and going forward also this is what our strategy is, to focus on top line, improve our top line, and parallelly work on manufacturing cost and supply chain efficiency.
Okay, all right. Mr. Shukla, you have given us a sense about the focus on top line. There are only two parameters out there. One is realizations, which is not in your hands. The second one is on volumes. So what is the volume growth you're looking at? And you briefly spoke about your product mix as well. The trade sales, I understand you want to increase. To what level? And premium sales as a percentage of your sales, to what level will they move to?
So realization, I think I would say the part of this is within our control. So okay, prices we cannot control. This is something which is given, but selling the product in the right market and the right product in the right segment is what is giving us the right kind of realization, right? So I think partially, I would say that yes, we control realization. Now coming to the volume growth, till last quarter we have grown in double digit. Our growth has been around 15% plus. And when we are going to close this year, I suppose that we are going to grow at a higher rate, higher than the industry. And we suppose we are going to have a growth of volume at around 15%.
15%, right? Growth for FY23.
Yeah.
And you also want to give us the mix, premium sales as a percentage and trade sales as a percentage. How much is it likely to be?
So I think our focus has been on improving trade sale. That is what we call segment mix. So our plan is to take it to 60% plus, and that is what the industry average is. Typically, industry is 60-40, and that is what we are trying to catch up.
Mr. Shukla, in terms of the inputs, right? We had Mr. Anil Singhvi, cement veteran, join us earlier, who said, the worst is behind and things will keep improving. It'll perhaps take time, but it'll keep improving. Could you give us some sense of what you are saying at JK Lakshmi, and how is that going to impact profitability? Some numbers.
Yeah, so cost, I think, yes, I would definitely say that, worst is behind. And if you have seen, last few months, coal prices and pet coke prices are softening. And that is going to give us some advantage in coming quarters. Because, a lot of companies are holding on to stock, which is at a higher rate. And next quarter onward, I think some benefit is going to come out of it. Right? If you want to put this as a percentage, then maybe I think there is some kind of softening in cost, and which is going to impact positively by about 10 to 12%.
10 to 12% EBITDA per ton.
Yeah, around 10%. Yeah.
Okay.
So can your EBITDA per ton inch up closer to say $700 per ton, sir? What is the number we should expect?
So right now we are at about close to 800 rupees per ton, right? And our plan is to take it to first milestone is to go to 1,000 level, and for that we do have plan. I told you that we are working on top line, and parallelly I think cost reduction in cost base, that is what is our focus area, along with the supply chain efficiency.
So when
We are
can you
trying to reach
achieve?
to that 1,000 rupees level. Yeah.
So when can you achieve 1,000 rupees per ton EBITDA?
Our plan is to achieve this in the coming maybe around 12 to 18 months time.
In 12 to 18 months. All right. And when you're calculating your EBITDA per ton, sir, I'm thinking that you're also including the other income.
Yeah, other income is we have VAP product also, what we call value-added product segment, wherein we have got RMC, AC block, and POP businesses, right?
Okay, so 200 rupee increase in the next 12 to 18 months is what you're looking
Yeah,
at.
that is what I see. Yeah.
On the EBITDA per ton front, you're not yet given us that premium sales, sir. I think it was around 20% of trade sales.
Yeah, so we were at 20% last quarter when we closed. I think we were at about 24%.
Okay.
Our plan is to take it to 30% in next 12 months time.
So this is as a percentage of trade sales, right? 24% of trade sales. Okay.
Exactly. Yeah.
Got it. Besides the industry on the whole, I just want to ask you about your expansion plans. I think on a consolidated basis, you're close to around mid-teens, 16, 17 million tons, and you want to take it to around 30 million tons. How do you plan on doing this? Will there be some inorganic growth as well that you're looking at? Are you on the prowl as of now?
So our strategy is to really grow profitably, and this is what we have laid down our strategy of growth. Right now we are at about 15.5 million ton, and perhaps you are aware that we are putting up 2.5 million ton within our subsidiary of Udaipur Cement Works Limited. So that will take us to 18 million ton by mid of 2024. Now balance 12 million ton which we want to achieve by 2030. That is going to be combination of brownfield expansion of 6 million ton and greenfield expansion of 6 million ton. So that is what is going to take us to 30 million ton. As I said that we want to grow profitably, and our growth plan is internal as of today. But any opportunity which comes, which adds value to our strategy and which gives synergy to our strategic direction, definitely we are open for that also.
Do you have anything on the anvil, sir, in inorganic moves? And what is the comfortable net debt number for you?
So right now, net debt, I think EBITDA level, I think JK Lakshmi Cement is almost nil, right? And I think net debt EBITDA, something within 3 is good enough. I think this is comfortable.
Okay. Your consolidated net debt, sir, we look at it on those bases because you have Udaipur as well in there, and you're expanding capacity by around 2.5 million tons.
Yeah.
So what is your consolidated net debt? I think the rough numbers are around 700 crores as of now.
Yes, that is what is there. Yeah, you are right.
And what is the peak debt you're looking at, given that you have expansion that's coming on stream and you'll be moving from 15.5 to 18 million ton?
Yeah, so I think that payout is going to be phased out, and in the interim will be paying our debt also, right?
Okay.
So probably I think peak debt is going to be about 12 to 1300 crore.
Okay, all right. And no plans on getting both these two entities together? We have currently 2 listed entities. You have.
Yeah. I think we do have plan. I think we are looking at a time horizon of around 3 years.
Okay.
Maybe after 3 years, these 2 entities are going to merge.
Your predecessor as well had told us a couple of years, but it didn't happen. So maybe by 2025, both these 2 entities could come together. Are we getting that correct?
That is what we see. Yeah.
All right. Well, it's been good speaking to you, Mr. Shukla. The street has given you a thumbs up from the time you have taken over in the last 3 months or so. We look forward to speaking to you here on CNBC-TV18. You've given us a fair bit of details. Wishing you all the best for the remainder of this fiscal.
Thank you so much. Thank you.